Hello everyone, this is Mina Roshan with Briggs Freeman, Sotheby's International Realty, and here I am with the great Vanessa Kennedy with Connected Home Lending. Connected Home Lending is our one of our partners and in-house mortgage lenders, and we're going to talk about her and a little bit more about the industry and see where the mortgage industry is going.
See where it's going.
Yes. How are you today?
I'm good. Thank you so much for having me.
Thank you. So tell me a little bit about you and why mortgage?
So I have been in the real estate world for over 20 years. I actually started working for a developer in early 2000 and learned the business from the ground up there. And I ended up moving on into commercial lending for commercial mortgages. And then from there I went on into private equity, where I did asset management in the railroad sector, which was an interesting niche, and I did that for a long time.
Oh wow.
And then during COVID I transitioned into residential mortgage because it gave me some flexibility to work from home.
Of course.
And I absolutely love it. I love working with people and assisting them, and especially first-time home buyers, which I'd love to talk about today.
That's great. Well, you said first-time home buyers. Why don't we start there?
Perfect.
I'm a first-time home buyer and I come to you. Describe the procedure. How do we go from there?
So what I want to know when I first talk with home buyers is what are your goals, what are you hoping to achieve, and what are your challenges and what are your fears. So my job is to really address all of these things and provide a seamless, easy as possible experience for buyers. So first-time buyers, we do a lot of education, and I love helping buyers understand the process and the terminology, and making them feel comfortable so they never feel like they're a burden or that they're asking silly questions. Everything's important to each person, and we just need to sort through all those things and make it a great experience and get them in their first home.
That's great. So how would you say let's say they don't have the great credit and they're hesitant on moving forward with purchasing their first home. How would you assist them in that?
So the great thing about us, and one thing that makes us a little bit different than maybe walking into your traditional bank, would be that we have an expansive set of programs. So we can go the traditional route, which FHA has credit score options down to 580. But even if it's below that, we can do a credit analysis.
Oh, wow.
And yeah, we can analyze their credit and let them know what needs to be done to get it up to where it needs to be. But we also have expanded programs where we might be able to look at compensating factors and do a different program that's even below 580. Another really awesome thing that we have are down payment assistance programs where credit score needs to be 620 or above, and you can get up to 5% down payment assistance that helps you. I mean, if you're doing FHA, like down payment's 3.5%, it covers that, and then it covers a lot of your closing costs. So
my God.
You can get in with very low money down, even no money down, depending on the way the agent structures the contract, and if the seller is willing to help with anything on concessions, then there's truly a way to get a zero closing cost mortgage.
Oh my God, did you guys hear that? That is amazing.
Yeah.
So how would you compare lending now and 2008? I mean, are we heading there?
So the downturn that we had in 07 and 08 was primarily due to loosey-goosey lending standards, giving loans to people that didn't have a good financial outlook. There was a lot of risk in those loans, so it caused a lot of turmoil when the market changed. And when consumers lose confidence in the economy, when employment rates go down, all those things negatively affect the real estate market and negatively affect mortgage performance. So that's really what happened there, but lending standards got much tighter over the past 14 years. So there's less default, there's been less risk in the market. So
the reason I asked this question is because you said they even offer some type of mortgage with the people that have lower than 580 credit score. That's why, I'm like, are we getting there? Is it going to be so easy for people to get loans, or is it different screens that they go?
If you have a lower credit score, there needs to be compensating factors that would allow a mortgage to be approved at that level.
Okay.
So either we can work to get your score up, or let's say that you have other factors such as a long-term job history, or things that help the lender look and feel more comfortable with approving a mortgage. Like sometimes there's just been some bad luck and things that have negatively affected the credit score, but your overall financial picture looks good.
I see.
Then we look at all that.
Okay, that's good to know. Thank you. And why would someone come to Connected Home Lending? Why not some other? What sets you apart?
So we really try to provide personalized service with excellent customer service. We are in-house with Briggs Freeman, so we're always here, we're always available. We love to have clients come in. We offer a complimentary consultation with home buyers if they would like to do that, to go through all of the ins and outs of the mortgage process in person. So we offer competitive rates, and we really have to live up to the standards of Briggs Freeman Sotheby's. So we always make sure that we're closing on time, that there's tons of communication, that everyone's happy and understands the process throughout the entire way. So just one of the things that we
Would you consider yourself a 24/7 mortgage lender?
Yeah, I mean, you really have to be, because this market is still competitive. So we need to make sure that we're there during the offer process to help agents, to talk to the listing agents and let them know, about this borrower and that the file is strong and that we've gone through everything. We've looked through underwriting and that we can get this file closed so everyone feels confident in moving forward.
Great. You said underwriting. Is the underwriting in-house, in the office, or?
So we have what's called an underwriting pod that we use. It's always the same group of people that we communicate with. So our processing and our underwriting is always the same group that we work very closely with. We have constant communication with them. So they're great. They're a seasoned group of professionals, and we're very confident with them.
Are they in Texas?
I think they're mainly in California, because our home office is in California.
Oh, I see. Okay. What would you say are some of the differences between loan programs?
Okay, so there's many different loan programs to choose from, and it really depends on the buyer and their goals. So we talked about FHA earlier. It's probably the most lenient of guidelines. With the FICO scores, you can allow a higher debt-to-income percentage with the FHA, and it's got a low down payment of 3.5%. FHA is great because it also has the lowest of probably the rate structures. So you're getting all these benefits, and it's really been designed this way at a federal level to help buyers. Like, the government wants buyers to experience homeownership. So there's been a lot of incentives to help that. There's also conventional mortgages, and those are great. You can do as little as a 3% down for first-time buyers. You do have to have a little bit better credit, but that's a great program, and you don't have any upfront private mortgage insurance. So FHA does have an upfront mortgage insurance component, but it's rolled into the loan, and conventional does not. Then there's also USDA loans, which are zero down loans for kind of more rural areas. And then of course there's VA loans for veterans, and there's some great incentives on those. We're part of the Texas Veterans Land Board program, and that really provides even lower rates for veterans through that program.
So we are in a multi-offer situation. Which one will win?
I think that there's a lot of different ways to look at it, and one of the things probably would be what's most important to the seller. I don't think that sellers should be afraid of FHA. Like I said, FHA is the most lenient approval process for buyers. So I mean, the goal is to get them approved and get them closed. So I don't think there's any reason to be afraid of that. But you know, I think if you have a strong buyer that's been through underwriting and is fully pre-approved, that's the best way for a seller to know that this is definitely going to close. I don't have to worry about this buyer.
And I think we were talking about in the meeting that when you put a human touch to it and you write a letter, when you talk about the situation, sellers, a lot of sellers, they like to connect with the story behind it as well.
Yeah, and I'm always happy to talk with the listing agent and let them know, you know, here's all the components of this buyer's file. It's very strong, and you know, we're definitely going to get this closed on time.
I see. Because it's very important for a mortgage lender to know all these little loops and, you know, to try to push that an offer to go through. And okay, so how would you see the market? I mean, I know people are now very scared of, you know, of the rates and everything. How would you see that?
So the good news is, so we're nearing the end of the second quarter, and there's been some market outlooks that have come out for the remainder of 2023 through the end of 24. All the predictors, indicators, professional outlooks from Fannie Mae, Freddie Mac, Mortgage Banking Association, all indicate that mortgage rates are going to go down. So over the next 6 to 18 months, and no one can say for sure, but it looks like we're going to have at least a 1%, you know, possibly 1.5% rate reductions coming down the pike.
Wow.
So that's great for
King fives we're talking?
Possibly, yeah, we'll see.
Full disclosure,
Yeah.
nobody has we don't know yet.
I love
predictions.
I love talking with people about this, and we have like some great detailed information that I can share if anyone wants to call me and just gab about what's happening with the 10-year treasury, mortgage-backed securities, all that plays into it. So I'm happy to, you know, kind of pop on a call and talk about it more. But all the indicators are that we're definitely looking at a reduction in rates. And so if you're buying now, even though the payment's probably a little bit more than you would like, hopefully within 24 months there'll be a refinance opportunity to get it down lower. And
Okay, so would you say that the buyers should wait?
I mean, I don't really advise that they wait, because
Exactly.
buying a home is when you're ready. A lot of people are ready right now, and we're seeing some more inventory come on the market, which is helping with prices and you know, buyers being in a better position. So I think if you can find the right home in a price point that you're comfortable with, then ease into the mortgage process right now, understanding that all indicators are that you'll be able to refinance into a lower rate in a couple of years.
I always advise my clients that in real estate it's never good to wait, because when the interest rates come lower, comes in all these buyers.
Yes.
Everybody wants to buy then, and then comes in multiple offers, and then you might have to end up paying over ask. Right now, I say it's a good situation we're in, that you can actually negotiate, you know, the price. It doesn't have to be full ask or above ask, or, you know, we have something to negotiate on.
Yeah.
But then if you wait, interest rates come down, and then everybody wants to buy.
Yeah. So about 2 months ago, there was about a 0.5 point drop in interest rates, and that week there was a surge of 30% increase in mortgage applications.
Oh, wow.
I mean, people are watching. I mean, consumers are savvy, so they know as soon as rates come down, it's going to push everything back up for, you know, it being a seller's market again.
Exactly.
And don't forget that we can always address temporary rate buydowns that can help your payment
Yeah,
over the next 2
explain
years.
about the buy downs, yeah.
Yeah, so temporary buy downs, there's 3-year, 2-year, and 1-year options. And basically it needs to be paid, the majority of it needs to be paid by the seller. So it's something that you can negotiate in your offer as a seller concession. And it will help you get through this time of higher interest rate period until the next refinance event. And it's a great option for a lot of people. So it needs to be kind of sorted through before you place the offer. So I always recommend getting your pre-approval in advance. It just helps you know for sure what your price range is and that there's nothing that's going to surprise you during the process. And then we can talk about what a buy down would cost that's within your price range, that's within your down payment range. And you can roll that into your offer and hopefully get the seller to pay for that so you can have a lower payment, during the next couple of years.
That's great to know. Yeah. There's a lot of options, so don't hesitate if you're going to buy a house, and just don't wait. Just bring out all your questions. Either you can contact me or Vanessa, and I will add all the contact information as well, and just ask.
Yeah, we're here for you anytime. Give us a call.
Well, this was great. Thank you so much for meeting me here.
You're so welcome.
Thank you. And you guys have a great day.
Bye.